Hello, good weekend. It's Adil Fazal again, bringing you a review of the European markets for the weekend. Okay, so be sure to visit my website at Analysis.com, and you can certainly see my content on there, and also the information that I upload. Also, if you want to learn trading, I offer a mentoring course, and those that want to trade and learn after they've taken the mentoring course, the live analysis service is usually designed for intermediate and more advanced traders who want to get a second opinion whilst they trade during market hours. Okay, so last week was a good week overall, so more than 100 points gained trading the markets intraday, so that was good based on intermarket analysis. And like I said, details are on my website, and you can certainly follow my Twitter feed as well. Okay, so the reason why you're watching the video obviously is to gain some insight into European markets, and not for me to certainly continue to talk about my services, etc. So let's get started. Okay, so in terms of European markets, basically the focus will be on the coronavirus. The latest hit, and these are tweets that I'm reading right now over the weekend. Mars said incubation period for the coronavirus can range from 1 to 14 days, and that virus is infectious during incubation, which was not the case with severe acute respiratory syndrome. So basically the crux of the matter is, unfortunately, the situation has certainly got worse. Okay, looks like Xi is trying to appear more involved in and concerned about the Wuhan virus outbreak. His absence has not been gone unnoticed, etc. Basically, the spread of Wuhan coronavirus is accelerating. China President Xi warns cause public health situation is grave. Xi convenes a potential emergency meeting, etc., etc. So unfortunately, the sad news is the headcount certainly is going higher. Okay, and the situation certainly isn't coming under control, which again has affected US equities and led to a sell-off. Okay, so how will that affect European equities? So let's, especially going into Monday's trading session, so let's have a look here. Okay, so Monday's trading session, we have a potential HNS formation on the FTSE 100, first and foremost. So you've got a left shoulder here. Keep an eye on this pattern for the week ahead, okay? And then your right shoulder, and looking for a crush or a sell-off. Now, given the fact that the situation certainly has escalated, don't be surprised to see a potential massive gap down on the FTSE 100. Now, I know we finished around the 7585 on the back of stronger data out of the UK, although the expectations for a rate cut certainly are diminished to a large extent. Okay, but the market participants certainly were buying the FTSE in the back of that stronger economic data that came out of the UK. Now, again, whether you interpret that as dovish or hawkish, etc., I'll leave that to you, okay, as a trader, whether you're trading sterling, etc. And as you can see, if you look at sterling as well, that certainly did slide quite substantially, even though the economic data did come out stronger than expected. Having said that, though, that was certainly negated to a large extent, or the counter argument is that obviously the coronavirus created a scare, the yen and the dollar were obviously caught a bid, and hence sterling certainly sold off. Okay, so going back to the FTSE 100 daily chart, again, like I said, keep an eye on that potential HNS formation. Any retrace will be back down to 7440. So if you do see a 130 point gap down on Monday, which is very, very likely given the coronavirus certainly has escalated, there's more deaths and more individuals, obviously, that are infected, etc. And the situation certainly is spiraling out of control very quickly. Okay, so 60-minute chart of the FTSE 100, we certainly have key resistance here on the 7630, 7640 zone. And again, like I said, don't be surprised to see a potential sell-off. Back down to 7530 and down to 7500 on the FTSE 100. Okay, now moving on, German DAX. Now the German DAX failed to break out, as you can see here, 60-minute chart double top. Okay, again, we've got an unfilled gap below at 10300, 10390 to be precise, and then also 10310. Now don't be surprised to see that gap closed on the back of the coronavirus phase. Okay, so again, certainly a risk off scenario there. Daily chart, again, we've hit that key resistance and we've been unable to break through that, and like I said, the two unfilled gaps below certainly are primed to be closed on the back of the coronavirus scare, should I say. Okay, so daily chart on the French CAC, again, those are your trading the key diagonal trend line certainly has held up so far. Okay, but we are now vulnerable to it breaking down. Now you've got the two unfilled gaps here, so just a one unfilled gap for now, and then obviously an unfilled gap below, which is here. So there's a battle of the gaps. Now again, given the fact that you've got the coronavirus fear, etc., etc., certainly looking for that gap to close on the French CAC around the 5970 zone, and then don't be surprised to see the gap close at 5885 as well. and if the situation gets even more dire, the H&S formation will kick in. The H&S is 611.2 down to the neckline around the 5960 zone. Okay, so quite a substantial sell-off there. Okay, 140, 150 points. So you're looking at around 5750 if the market were to sell off, and then you got the unfilled gap at 5650 as well. So everything is a possibility when it comes to trading. That's basically what we do as traders. Look at all eventualities and then obviously adjust our risk parameters accordingly. Okay, so again, there's a rising contracting wedge pattern certainly forming here in the long run, so potential bearish scenario. But either way, we're not going to look too far ahead. We're only focusing on Monday's trading. Okay, 60-minute chart, the French CAC. Key resistance certainly has held every time at 5065, so very impressive there. Although having said that, we have to take into account both scenarios. So if the market does turn bullish and there is a potential cure, and by Monday if there's preventative measures in place, etc., which is risk on and so on and so forth. Either way, if there's talk of more QE to stabilize the actual should we say fallout from the coronavirus, as we all know, obviously I think 16 cities are on lockdown now, and in excess of 60 or 70 million people certainly are on lockdown as well, in terms of public gatherings, in terms of transportation, in terms of goods and services, and so on and so forth. So the world relies on the Chinese economy now. When the Chinese economy is in shutdown mode, the whole world is in shutdown mode. European markets, again, very, very important in terms of the China consumer. And as we all know, with regards to Trump's $200 billion phase one trade deal, that certainly is up in the air as well. Okay, so keep that in mind. Unfilled gap above is at 6080 and then 6100. And then the unfilled gap below is 5970. And again, like I said, when we have an emotive sell-off, there's no limit in reality, technically speaking. I mean, don't be surprised to see a gap down to 5915, 5882, and then the market could continue sliding. We could have a 300-point gap down. Again, it's the market that dictates and the market that decides. We are merely spectators. Okay, now in terms of Euro stocks, quickly giving you an insight in regards to that. Okay, now 60-hour chart, I've got a lot of trend lines here. So again, rising contracting wedge pattern. Okay, so keep that better, obviously potential scenario in mind. Again, that's never a bullish sign. As a trader, those are used for technical analysis. Certainly isn't a good sign. Either way, we're not looking too far ahead. Again, like I said, it's just more of an intraday view for Monday's trading session. And again, there's too many variables in this market to really look further out afield. Now, daily chart at the moment, we're trading sideways. That's all I can say from now. It'll be very ambitious for me to start forecasting H&S formations here. I mean, it's again, let's have a look at a 60-minute chart. Okay, again, there's no real head on this head and shoulders formation. In reality, we're trading sideways. Having said that, though, there is an expanding, obviously, a wedge pattern, which again is a bearish sign, certainly a sign of exhaustion at the top of a market. So let's see how that unfolds. Unfilled gap below is at 3730, and then obviously you've got that unfilled gap below even further, 3700. So again, don't be surprised if the market gaps lower on Monday night, or should I say Sunday night, Monday morning, and looking to potentially close that as well. If we do break higher, if we do break higher, then you are looking at 3810 as key resistance. Once the market obviously paces that and exceeds that, then again the market will certainly look to make new highs, but very unlikely given the backdrop and the uncertainty and the fear regarding the coronavirus. Okay, so I think that's a summation really of the European markets for Monday's trading session. Again, like I said, please be sure to visit my website, and you can certainly catch me on Twitter with regards to my updates. And these are the two key books that I always recommend, and I teach in the intermarket analysis approach to my students, so highly recommend these books. But the first book to get if you are a beginner, these are really for intermediate stroke advanced students, but if you are a beginner, then there is another book that I recommend, so be sure to check the details on my website. On that note, goodbye now.